Yes, well, warm welcome, everyone. Dan's going to drive the
Drive-through.
I'm going to go from here just so as, there's just not so much beauty clumped
There we go.
in one spot together.
Thanks, Tom, for the intro. Dan, Kris. Kris will start us up.
So before we go, just back one slide, please. Before we do kick off, I do want to very much emphasise that we're going to be speaking in very, very broad terms, and any type of information that we give is general information only, and does not take anybody's personal circumstances into account, because of course I need to say this. Thank you.
Thank you.
So, what your cyber liability policy can cover, there's a lot of different options here. There's a lot of different insurer options. But before I delve into this, in the first slide of the presentation given by the gents from Smile IT, there was a picture of an iceberg in the Titanic, and I think it's actually incredibly poignant that slide was put up. These guys haven't actually seen an interview that was recorded of Dan and I that hasn't aired yet. And funnily enough, I gave an example of the Titanic. Just to delve into that a little bit, back in 1912, the Titanic and her sister ship Olympic were the most really technologically advanced pieces of equipment on the face of the planet. They had these great things called watertight compartments that, X amount could be breached. See, using a cyber term there, breached, and she still wouldn't go down. Every piece of modern technology at the time were fitted into these ships. They're not going to sink, are they? Well, we all know what happened. And the board of the White Star Line had the foresight to think, we've got these brilliant pieces of technological ingenuity. Maybe we'll take out an insurance policy just in case. Just in case. And look what happened. Incidentally underwritten 100% by Lloyd's, full amount of the hull was paid out in 30 days. A little bit of trivia. Just in case you're after it. There are a substantial amount of nuances between the first lot of slides we looked at and what we're going to be seeing now. Funnily enough, we haven't seen each other's presentation, and we've extracted data from different sources, but the data is pretty much the same, so it's actually quite a relief that we're corroborating the same thing here. But as I say, we're going to be speaking in very, very broad terms. So these are the options that you have when you're talking to your cyber liability insurer or your cyber liability broker about really what options you have. And a lot of it will really depend on the cyber stack, the security measures that you have in place at the time. Because, well, if you don't really have a terribly good amount of cyber security, why would an insurance company want to put their money behind you and back you in the event of a breach? Because they know that you're a bad risk. They're just going to hemorrhage money with your account. It's very much a matter of rate for risk. The better security controls that you have has a direct result in how much premium you're going to pay.
All right. I'll talk a little bit about what insurance claim auditors look for, and it's something that I think everyone covered quite nicely. It's about de-risking. I think that's the main core of any of these conversations about resilience. It's about how do we reduce the risk, broadly speaking, the financial risk, the technical downtime risk, the potential loss of data risk, and the need to pay ransom. There's a term I'm sure a lot of my tech colleagues would like, time to breach and time to recover. We'll probably pivot on these two terms a little bit in terms of what auditors look for. What an auditor is looking for is, if I'm okay to say this, is a reason not to. A lot of forms are being filled out these days by CFOs, people without a direct understanding of the controls that you have in place. They're looking for incident reporting and documentation. They're looking at your security controls and baselines. Things like E8 is a framework that has most of the baseline controls that an insurance form questionnaire will ask of you. And I'll segue into how we work with it. We work with the likes of Smile IT for a reason. It's because the answers that are being provided back in these forms are accurate. They're being monitored. They're being enforced. And I wanted to give a quick example about MFA. We talk about MFA a lot. So for evidence of a security control, if you have an internal IT person that turns on an MFA from the Microsoft portal or turns on security default, that's not the same as Smile IT monitoring and managing your MFA implementation. These are things that look for, and the reason being is you can turn on MFA and have 3 users with it and 7 users without it. 1 user gets hit, there's lateral movement across, and
Claim declined.
claim decline, pretty much.
Sorry, if I can just extend on that, why would the claim be declined when some of you have it, some don't? It's a material fact that some users are not using it. And frankly speaking, it's why so many claims within this sector are declined, and why the policy itself does get a bad rap. If you have a chief operations officer, if you have, I'm sorry, what was the other term that you used, the position? Chief operations,
CISO.
CISO,
CFO, sorry.
CFO. These guys are across an entire business, and you know what? The IT component may not be their entire auspice. We're talking about small to medium-sized enterprise here. We're talking about large enterprise, and then we get into the larger corporates. And it's an insurance document. It's just a tick in the flick box. Do I have it? Pretty sure. Sure. But then when it hits the fan, that document that you've duly signed and said all of this information is factual and correct, well, that's the basis upon which an insurer has decided whether to insure you, whether to indemnify you or not. That's the get-out clause. So it's so important that your MSP, that Smile IT, is involved in the completion of these documents to ensure that your insurer does have a fair and accurate example of your cyber posture, of your cyber security, which means then that when the inevitable breach does happen, there's no get-out clause because you've given a full factual declaration of events and what measures that you do have in place.
So we've got data handling and privacy is a main topic, but regulatory frameworks need to be in place. Most of your let's call them quotes that come from insurance will have a term that relates to your regulatory compliances that you need to adhere to. A couple of days ago, on the 30th of May, the ransomware regime was released or updated, and it has things in there like if you're a business, you make more than $3 million, you need to have an incident response plan. You've got 72 hours to respond, and so on and so forth. So these are things that insurance in general looks at a claim. Financial and legal due diligence, proof of incurred costs, third-party contracts, and risk transfer. This one also goes into, the due diligence goes into vendors. A lot of companies don't assess the vendors they use. There's 1,000,001 cybersecurity company out there and MSP out there that are promising the world. So doing due diligence on those companies, ensuring that they are leveraging vendors that are compliant with Australian regulation, that fit the risk of your company, and so on and so forth. These are the things that I looked at. Policy conditions and inclusions. This one's an interesting one. We'll touch on that a little bit later, but sort of recaps Smile IT's presentation as well as Ozal from Acronis. It's all about the amount of risk that you've got present. You put MFA, it might reduce your risk by, let's call it 60%, 70% in some cases, it's not more. You put conditional access MFA, which was mentioned earlier, where you can only leverage that MFA on a conditional access that you're within a region, that reduces your risk further, and so on and so forth. We look at the root cause of the incident, pre, post, during. A lot of incidents do occur and spread, and the spreading of it is what's not being contained properly in Australia or in most countries, and is not very regulated up until the recent regime where it's regulated on almost all industry. Anyone that's making more than $3 million a year, or that's considered a company that operates critical workloads from a tech perspective, falls under that umbrella. And the last one, and the most interesting one, is business continuity and disaster recovery. Now, I'll segue quickly into a lot of forms that we do see that are filled out by clients, is that where it comes to the question of, do you have disaster recovery? They'll put the name of their backup there. As Ozal mentioned earlier, backup needs to be tested, backup needs to be monitored, backup needs to be made available within a set period of time, and it's got a lot of importance in terms of, without going into the next slide, premium reduction, coverage being a bit more wide. There we go.
Now,
All good.
Before I get into this, a gentleman raised his hand. Are we doing questions now or at the end?
We can do them now if you're going to answer one.
Shoot.
It's in relation to third parties and what's potential coverage you have if the third party gets breached that releases your data into the world.
Can you give me a worked example?
So, for example, you've got an external system you use for your finance system.
Yep.
That finance system is breached, your data is everywhere. Are you covered under their cybersecurity policy?
So, really, that your data has been leaked elsewhere, so it would be, if you suffered a loss and you had a loss that you were able to prove, then it would be that organisation that you would be taking up a civil matter, and dependent upon what insurance arrangements they had in place, would depend on whether there was a policy upon which they could call upon to really to indemnify them against the loss. That's a risk that the other organisation is really needing to take.
In the meantime, it'd be better if you had your own policy system that would cover their breach.
Again, in short, yes. But again, I would qualify it by saying, whilst your data may have been leaked, what are the financial ramifications of that? Now, that's going to vary quite a substantial amount between industries and businesses, but speaking in principle, it is an insurable loss. Again, dependent upon what type of policy you have in place. Again, forgive me for not going into specifics, but we are speaking incredibly broadly here in very, very broad terms. It's a 20-minute presentation. But more than happy to continue the discussion if you want to get into the nitty-gritties of it. I love this type of stuff. I'm such a nerd. Afterwards. The state of the insurance market when it comes to cyber liability at the moment, frankly, premiums are cheap compared to the risks that are out there. Now, that's not going to last for very much longer when you look at the hard quantifiable data. Insurers have kind of been beaten around their head for quite some time, driving premiums down for cyber liability. Now, that's just simply not going to be the case anymore. There's hard quantifiable data out there. As a prime example here, it used to be so easy to get a $50 million limit of liability for your cyber liability policy. Some insurers are even putting lines out of $100, $150 million. Now, maximum that you can get at a somewhat reasonable premium is $10 million. If you want to get more, then really you're starting to talk about quite a sophisticated and structured approach. I'll give an example. Anybody ever heard of the retailer from the UK, Marks and Spencer? Everybody hear about the, I was going to use a very choice word there, but I realised I don't know my audience that well. The cluster that transpired a little while ago, in essence causing them to essentially nearly just cease business globally. Anyone want to have a guess how much of a limit of liability they carry? Huh? I think it was about £10 million. Sorry, £100 million. What are they up to now with the loss? A couple of billion?
Estimated £2.1 billion so far,
There we go.
with only 100 mil covered, yeah.
Yeah. Oh, pound sterling, though, let's face it, when you're talking about a couple of billion, who really cares?
Mind you, Harrods and Co-op, no cyber.
Yeah,
No.
that changed really quickly.
Yeah.
So, coverage reduction, substantial coverage reductions. Claims have exploded. Insurers are having to employ more cyber engineers and more individuals in their rapid response teams to deal with the amount of cyber claims that are coming through. Average claims have jumped by 100% of 250,000, jumped to now reach $250,000. That's more or less a 100% increase in what they were 12, 18 months ago. So all of this is being seen on a claims front. It's making its way up to C-suite and board level, and is soon going to have a trickle-down effect into underwriting. And underwriters are going to get absolutely caned from their executive boards to say, no more cheap premiums, no more high... Personally, I think this limit here, 10 mil, I think that's going to come down even further. My own little bit of speculation. Buy it now while you can, it's cheap, and while you can get it on the ground floor is my own perspective, because for those of you that do have a current cyber liability insurance policy, chances are you're going to expect some bill shock in the next 18 months or so. The premiums are just going to go up. If anybody remembers Yasi and property premiums, what happened to home and contents policy before was costing you $800, all of a sudden it's costing you $8,000. Not going to be that dramatic. However, expect a little bit of bill shock. Insurers just cannot sustain the losses anymore. Reinsurers will not sustain the losses any longer. Premiums simply will go.
So how do we fight that? We had a look at all the different...
Let's flick over a slide, because I've just pretty much more or less covered what's over here.
Before we go on to the next one.
Yeah.
Okay. All right. I'll cover can it happen to me. There's a misconception out there, and I mean, it's heard a lot, is it's not going to happen to me, or we're too small to be targeted. The reality is, in 2025, up to date, 43% of attacks were targeted at small and medium businesses. Their success rates are exponentially higher than on larger organization. Simple reasons is larger organization. Let's say, for example, DISP had a framework that was equivalent, let's call it maturity level 2, essential 8 from decades ago. So it's harder to penetrate. The point I'm making is, if I'm a bad actor, I'm going to go for the low-hanging fruits, and the low-hanging fruits are small businesses, because the likelihood are they've just turned on their MFA, they're not worried about backup, EDR, or any of the controls that Slime OT and Acronis covered, which means more likely chance of me getting through. The other misconception is I don't really have important data, so why would they target me? They don't really care or know what type of data you have. They're basically just spraying an entire wall, and where they can get into, they harvest the information and might be not relevant to them. They sell it on the black market to someone it's relevant to. From something like your sales list, which can sell for a few $1,000s, to something like a secret recipe of whatever your tomato sauce is, which might sell for a few $1 million. So it's literally just casting a wide net, and whatever fish comes out is sold to the relevant places or is used against you. With solo operations, we see a lot of blackmail come out of that as well, where they gather information that might be embarrassing to you as a person, to your business, or...
Let's face it, a lot of people have got a lot of stuff on their laptops that nobody would want other people to know about, but that's a whole different conversation at the time. revert this somewhat back to Mason's slide, and it was that simple phishing email. God's sake, they had an invoice spelled incorrectly. But as Mason says, things are becoming a little bit more sophisticated. Pretenders are getting a lot more smarter, and obviously, as you say, with the use of AI, things are just getting a lot more sharper. So, a lot of people are asking why I've got this brilliant backup. I've got such a strong, robust cybersecurity package that my cyber posture is absolutely brilliant. Why do I need this? And it's the human factor. We're all infallible, and much to Dan's blood pressure, being my business partner, there's a chance that even I could click on something that to me looks completely and utterly legitimate. Somebody who I think I may have met at an event like this wants to send me a request via LinkedIn to connect. It's as easy as that. And it also leads into types of businesses. So, you've got the likes of large multinational corporations that can be breached, down to a mechanic shop and a landscaper that's got one laptop that he runs everything off. It's the human factor. We're all human. People make mistakes. I've been tied before, and even when I've been doing online banking, I've forgotten a decimal point, and I've paid somebody, thankfully, $50 as opposed to $500. Nobody's perfect.
Oh, good. So we'll continue to how do we fight this trend now where premiums are going to go up, claims are going to be denied more often, coverage is going to be, is already shrinking a lot in terms of exclusions, what the insurance won't cover. The only way to fight it, and I mean, we were our first time with a couple of the insurance syndicates, the same question kept coming up. It's a crappy portfolio when it comes to risk. And the way we work it is we work with the likes of Smile IT by reducing our risk. How do we do that? We work closely with Smile IT to ensure they're using the right vendors, they're implementing the right solution, they're reducing that risk to bring back that appetite to, okay, cool, these guys are doing all the right things. They've got all the right controls in place, from user awareness to disaster recovery. If they do go down, the downtime is now reduced because of backup or because of disaster recovery. And that's sort of how we fight for you and the likes of Smile IT to put that business case forward to go, well, hang on a second, it's not like for like. Smile IT and their clients are less risky in terms of an overall conversation than XYZ because they implement Essential 8 for their clients, because they've got disaster recovery for their clients, because they've got conditional access for their MFA and so on and so forth. They do application control, and it's actually that simple. It's implement the right framework, have an MSP that looks after you, that knows your business quite well, that understands your risk, that reduces that risk, whether it's user awareness training, as Mason mentioned before, or whether it's simply just going, you know what, they've got 3 risky users. These users are basically only going to be able to open their email unless they're in the office from that particular IP address. That all works towards reducing that risk gradually, which makes any insurance company more likely to provide you with a better premium, with more coverage, and
less exclusions.
Less exclusions. So our competitive advantage, we only work with a few select MSPs. At the moment, we're only working with 83 MSPs. The reason being is there's a lot of IT providers out there, and there's only a handful of our MSPs that actually understand the entire cyber resilience conversation. It's not about just buying tools from a vendor, slapping them onto a client and calling it a day. It's very similar to the story that Smile IT, the anecdote about, securing the house, ensuring the windows are fortified, ensuring the doors locked, ensuring, your mail is protected, community patrol, and so on and so forth. It really does require a very comprehensive approach to de-risking or improving resilience of any business, which we have the luxury to do with good MSPs and MSPs normally want their clients less risky so they can sleep at night. So it's almost like a domino effect. We pick the good MSPs. Our MSPs work with clients that understand and appreciate risk and invest into it. So as a result, we get high limits than our competitors. We get better protections, and we encourage frameworks.
Premiums.
Yeah,
Yay!
yeah. There's a direct correlation with MSPs that implement E8 and implement things like disaster recoveries to just an overall successful insurance policy. Couple of quick insurance cases. I'll let you get started.
So we've got Inchcape Australia versus Chubb Insurance. Obviously, Inchcape Australia had a claim. Chubb said no. Inchcape said, "Oh, we disagree." Chubb said, "Well, still a big fat no." Went off to AFCA. So there was a ransomware attack. The claim was denied because there was no direct financial loss to the business covered under the policy. There was a direct financial loss to the business, however, but it wasn't covered under the policy. Who's at fault there? Is it the broker because they didn't really understand what they were insuring? Or did the assured, Inchcape Australia, think, don't really need the cover, can't really see how that's going to relate to me, I'm just going to say no and save a couple of grand in premium. The case itself really does underscore the necessity of having appropriate policy sections in place, because had they have had the correct policy section in place, the insurer would have paid. It is a claimable event. And had they have actually taken out that specific cover to cover them from that business interruption loss, check would have been cut, all said and done. Very, very easy.
So the interesting one, and what relates to disaster recovery, and today we were talking about disaster recovery, is it was one of those disaster recovery check when backup was in place. And the losses that stemmed from not having disaster recovery in place and the downtime in between was contested and was denied at the end because there was no disaster recovery when it was selected as yes.
Yep.
Ultimately. So a lot of these cases are coming down to just common sense, and common sense that MSPs understand really well. So I personally encourage every business in Australia to find themselves a good MSP. Smile IT is standing in front of us and work with them, and makes our jobs easier. It means we are more likely to sell you insurance, which is self-serving, and your business resilience is, let's put it a different way, you go to sleep at night knowing you've done everything you can from a technical perspective and from an insurance perspective. But one thing is for sure, insurance is always gonna look at what controls you have in place. It's one of those where, yes, I need insurance because there's no silver bullet for IT, but insurance will never replace having the right IT controls. It's as simple as that.
In the end, it's your financial safety net. That's the way we look at it. You can have all of these magnificent controls and security features in place. Regrettably, there is always going to be somebody just a little bit smarter. There's going to be a scrappy little 23-year-old tech head who hasn't washed his hair in about 17 days because they've just gone down the rabbit hole, and somebody's going to be breached. Will it be you? Who knows? But regrettably, there will always be somebody smarter and quicker and more agile. As long as you've got the right measures in place across multiple platforms, and by platforms we're referring to not only cybersecurity but financial safety net, means that the business can bounce back a lot quicker. Thanks very much, guys.